Hello, everyone. This is Tony Benson of Wealth Builders HQ and creator of Patterns in a Flash. This week I spotted a couple of patterns, and we're going to go take a look at them. First, let me get the disclaimer out of the way. It just basically says we're not registered broker-dealers, investment advisors. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. For regulatory reasons, we do not discuss funded trading. So the two patterns that we saw last week that we looked at were Twitter, which was a double top or a triple top or a quadruple top, whatever you want to call it, and then a double bottom on SOFI. So let's go take a quick look and see how they have played out, if they have played out, or what they're doing right now. So SOFI is still sitting there. It broke above the midpoint, right? So here's the midpoint of the double bottom. Broke above it, but it's just sitting there dancing. It's held that line, which is a bullish sign for now. The fact that it hasn't just taken off, I mean, you can see last time it danced around here, made a little double bottom, and when it broke above that level, it just took off. So the fact that it hasn't done that, a little bit of a concern, but at the same time, who knows? I mean, the market's a little bit extended. A little pullback in the overall market would not be bad. This is a fairly new stock. There's been quite a bit of excitement around it, but the last few days have just been sideways, so it's kind of dancing around here. So we'll see. We'll see what it does over the next couple days. If you've got the appetite for a little bit of risk, you've only got, the entry point is 16.93. The stop out point is 16.18. What's that, 75 cents or so? So, and not a super expensive stock. So it's something you could possibly just either buy the stock, but if you're trading options, you want to buy a call option on it. You could theoretically do a bull put spread, which is a bullish move, which actually may not be bad considering it seems like it's kind of sideways. But because those type of selling strategies work best in a sideways or a market that doesn't move. So now let's take a look at Twitter real quick. And this one is still developing. In fact, if we go back and look, and you can see, I called it a double top because it basically is. There's four peaks. You've got a little bit of a bump above that spot this one day, but you'll notice a little bubble down here that says earnings. That was an earnings day. So let me get back to candlesticks here so we can see a little bit better. So earnings came out and it gapped above there for a day, but then it got right back below that $70 level, we're still creating basically a top, or it has, and it's been dropping off here. Don't worry about this volume. There's something, I'm not sure what's up with the data, but there's some little glitch in the system that's showing this massive volume that's not realistic. So it's doing it on lots of stocks. But so Twitter's still in a decent position as far as the trading plan goes. In fact, the last couple of days, it's actually dropped below that $66 level. So it has also, just like SOFI, has broken the midpoint here, which is what we're looking for on a double top, right? We get the peaks, you get the middle of it, and that is what is confirmation of the broken pattern, of the pattern itself playing out. So we'll see what happens with this one again. Again, the market's kind of sideways. The overall market's been sideways. So whether or not Twitter gets beat up and drops off from here, if the overall market does, I wouldn't be surprised to see this go with it. If the overall market breaks higher, Twitter may just continue to go sideways. So who knows? It's always hard to say. That's one of the challenges of trading, right? We never know what is going to happen next. So we've just got to prepare, plan, and take a pattern which is consistent, right? That's the beauty of patterns. That's why I love them. They are consistent and predictable, and significant amount of the time they do exactly what we'd expect them to do. So as of right now, this pattern looks like it wants to go lower. So that's what I would plan and prepare for and trade based off of. And then if it doesn't, then it doesn't. We've got to mitigate our risks and use our stops and get out of it. So that is it for a quick review. This is the Pattern Whisperer signing off and reminding you that if you're going to fail at just one thing, fail at quitting. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.